Warren Buffett, one of the most widely regarded, famous, successful investors in all of history, famously said, people only go broke in 3 ways: liquor, ladies, and leverage. Well, Warren, as much as I respect everything that you've done, I don't really drink too much. I'm happily married, but I do love me a little bit of leverage. And a lot of us do. So you know what, Warren? It's not going to change. We're going to keep doing it. And in today's video, I want to talk about it's not brand new, but it's a newer form of leverage that I actually think is going to take over the trading world forever. And I've tasted a lot of the different forms of leverage, and I'm not being hyperbolic when I say that. I think this will change the game. So if you're out there right now and you trade futures, or you trade options, or you're messing around in the 0 day to expiry streets, or maybe even you're using a little bit of margin to get a little extra juice on your portfolio, you're fighting a system that is designed to wreck you. You are not the guy they want walking away with all the money. You are, my friend, of course, the exit liquidity. Futures, they require a lot of capital that prices most people out. Brokers are taking a cut at every single turn. And contract expiration are forcing your hand as we move through the calendar. And options, well, they're going to bury you under layers of complexity that most retail participants just don't understand and won't bother to try and learn. Time decay, implied volatility, all these fancy Greek words. So you're not often just wrong on the direction of something, but you're wrong on 5 different things and you don't actually even know that it's happening to you in real time. And 0 DTE, well, I get it. It feels like that cheap leverage, but you're paying more than you think in that spread and that premium. Just remember, the people on the other side of your trade are the best in the world, the brightest minds, the most resources, and closest to the mothership and the exchanges. And they're all facing you. So yes, all of these options do give you leverage, but they come with friction. They come with complexity. And lots of structural disadvantages that are just constantly working against you. Well, now there is a better structure, something so much simpler. And that is, of course, perpetual futures, perps. And they're here. Now, you can actually be able to start going and doing this. Well, caveat, if you live in America, like me, we are on the edge of our seats waiting to be able to participate, while most of the other world gets to have fun playing in these. And by the way, I'm James. I've been trading for over 13 years, and I have spent most of my time in the futures market, but I have dabbled across all different asset classes and tried a little bit of everything. And I'm a sticky user. I don't just move on to new things, and I don't take that lightly. But when I first kind of looked at and have experienced perps, I felt a cleaner, more efficient, more transparent version of the game of leverage that I've been seeking and playing my entire career. And once the USA gets the full green light, I'm going to move most of my trade execution right into this world of perps. So what are perps? How do they work? In this video, I've created a little deck that we're going to walk through here, and I'm going to break everything down for you and show you not only kind of what they are, but how they've grown in, really just the last year alone. I'll show you why the structure is better, what the risks involved are, and where the liquidity is flowing to right now. I believe that every major asset class is going to have perpetual futures here within the next year or two. We're talking stocks, bonds, currencies, energies, any commodities you could think of, metals, oil, like all of this stuff is going to have perpetuals. Anyways, I'm going to walk you through some of this stuff right now. Let's get into it. So I want to welcome you guys to the shift, and that is that the perps are rewriting how leverage works, and not many of you even know it's happening. As I discussed a little bit, every leverage vehicle that you're using right now is working against you. You know, if you've ever traded futures, and I'm not talking on the prop firm where you're actually just paper trading, I'm talking legitimate futures. You got broker friction, tons of margin requirements, expiration dates to worry about, exchange hours. It's all stuff that prices most people out. We all know about options trading as well, and you know that it is a gamble, all right? The time decay is eating you alive at all times. You have to really have a good understanding of the implied volatility and how theta and all the decay stuff works against you. And if you don't, it's going to be eating against your ability to profit from all different ways. Zero DTE, guys, I know, I understand it is cheap leverage, but it's going to destroy you over time. And one of the biggest problems is if you win on some of these early, you start to think you are a zero DTE guy. But I warn you, this is a death sentence, okay? You got to be very careful. And don't forget, margin can seem smart, especially if you're doing low margin. But in a world of increase in volatility, I mean, you start to think something's normal and then you get a crazy outperformance or underperformance by one thing, your margin requirements might change and it might lead to a massive liquidation of your account. Let's take a quick look at this amazing chart about zero DTE reality, okay? In 2025, it was up 41% year over year, up to 14 million contracts being traded per day. On average, retail sector is losing 350,000 a day. No problem. Now, from 2024, it is up 21.5% year over year, and it has become 24% of all options volume in general is zero DTE. I mean, that is nuts. You can see it here. The volume has just gone up year over year over year, and retail losses are just following it up right away. And you got to decide, man, are you going to be part of that retail fish? So look, what exactly is a perpetual future? Well, a traditional one, right, has an expiration date. You might be trading front month crude, second month crude, seventh month crude, spreads, whatever, right? You're going to have to roll those. You're going to have to close those, and settlement is going to force your hand there. Perpetual futures are simply just you're betting on the price going up or down. There is no expiration. There is no roll. There's no settlement date. You could hold for 5 minutes or 5 months. That's completely up to you. So you might think to yourself, well, how is it that the price can stay somewhat around the underlying spot asset? Well, that's where the funding rate and the funding mechanism comes into play. So if you are somebody who is long the underlying asset, right, and a bunch of people are long on the perps, it might actually go above what the underlying asset's current value is. And for that, you will be required to pay what's called a funding rate. So it's basically paying to be in the trade. And that can keep going up until it kind of incentivizes people to take the other side of it. Whether or not they're like, hey, you know what? That's just enough money for me to take the other side and be contrarian here. Or you can have arbitrageurs and people that want to kind of hedge. They can go ahead and like buy the spot and then sell the funding rate, and they could collect the difference. Then, of course, you go to the other side of it. And if you want to be short and a lot of other people are short, you will be paying the longs to be short. And look, if you want to take the other side of that, right, you'll see a negative funding rate and you want to get long the asset, you'll actually be getting paid to be long. So really interesting how this changes the game. Okay, so let's dive into that a little deeper here. Let's just say day one, the Bitcoin funding rate is up at 150%. So that means to get long, okay, a lot of people are piling in long, and the funding rate is now costing you 150% on average over a year to be long. Now, of course, that will change on every hour it actually changes. But you could come in and see shorts start to pile in and smush that funding rate back down over time to get back to the spot price. Again, some people might be fading the crowd. They can collect that from the other side. They can arb, they can hedge, they can do lots of different things, but it is going to incentivize people to come in on the other side. And of course, when it's negative, the shorts are piling in. It's giving you a premium if you want to start building along, or maybe it's a contrarian setup where you want to fade the crowd, right? It's another sentiment read, if you will. And when I put this together, you could see that right now on Hyperliquid, which is one of the leading decentralized exchanges where perps are traded, Bitcoin is being priced at 11% to be long. Solana, a lot of people have been shorting it. And Graphene, which is more of like an AI meme coin, is also being pushed long. So you could start to develop kind of different ways you want to think about playing these coins. You could even build a vault, and that's a whole nother conversation, but you can create a portfolio with perp longs and shorts to play against each other. Hyperliquid is probably my favorite exchange that specializes in perps, and a lot of the data you'll see here is from there. But you're going to see right here that total open interest alone on Hyperliquid, 5.2 billion. That's live open interest on there. And you can see most of it is located in Bitcoin, in ETH, almost 2 billion in Bitcoin currently, Hyperliquid itself, Solana. Now, with the advent of HIP3, which we'll touch on in a little bit, you're starting to see other things compete that are like commodities and stocks. And what are other things you can see that'll give you more information? You're going to get open interest across all markets, liquidation zones, cascade levels, funding rates, and on Hyperliquid, I believe it's every hour, maybe two, but a lot of other ones will be 4 hours or 8 hours. You kind of got to check with that exchange. So it's all on-chain information. There's no gatekeeping. You have the information that other people have. Guys, this is a very important thing to look at, the structure of all this. Here's four major reasons that perps will kind of win in the end, all right? It's very capital efficient. There's no time decay. Everything is instant, right? There's no premium bleed when it comes to time decay. It's direct margin. Everything is held in one account. You can decide whether or not to isolate some margin or to use all of your assets. And there's no middleman just taking cuts from you all over the place, all right? This is a big deal. You know what else is a big deal? Being able to trade around the clock. We've been hearing a lot about this, how markets will close on Friday and some geopolitical thing happens after the market closes and you can't do anything until Monday. Well, that's changed here and it's giving you the ability to kind of hedge or adjust your portfolio in real time off real events whenever you need to. And that is such a powerful tool that we've needed for a long time. And guys, I want to remind you of the simplicity of this. We are simply betting, does a price go up or does a price go down? Okay, none of this Greek stuff, none of the implied volatility smiles, no expiration dates to worry about. Does the price go up or does the price go down? That's what we're doing here. And again, I want to reiterate, last but not least, transparency. You are not behind some gated information wall. You have it all at your fingertips. You can pull the APIs. You can use AI to your advantage. You can go find all the information you need. It's right there on chain for you. And by the way, I said I was a futures trader, right? Well, I was working at a firm in which we had a deal for round turn costs, and that was made it, reasonable for us to trade. But for people trading on their own with futures, I mean, you're getting round turn costs that are insanely expensive, upwards of like 4, 5, 6. I mean, even $10 if you're trading like spreads and things like that. It's crazy. Then, of course, you have options where you're going to have to per contract be paying a fee. Now, there are fees in perps that they do exist, but they are fairly small. And a lot of these things are in growth mode for a while, and they're going to keep them small. So they're going to give you a pretty good deal. They're going to give market makers even a really good deal and will often make it free for them just to start providing liquidity. And guys, not only are these networks growing and more users are coming and trying this stuff, but the proof is already kind of in the pudding. On Hyperliquid alone, over the last 12 months, you've had 190 active markets. Right now, there's 5.2 billion, like we mentioned. The 30-day average volume is almost 7 billion. And over 12 months, there's been $3.6 trillion in volume. And, we added in 2025 alone, 609,000 users to Hyperliquid. And again, this is not even including American participants. So you're up to 1.4 million. And we're going to show you in a little bit that this is only Hyperliquid alone. There are other players that are much, much bigger than them. But this is kind of proving to you that the open interest and the monthly volume is building over time with huge, huge numbers. Okay, so HIP3 is something you may or may not have heard of, but basically Hyperliquid made it available for people to without getting complex. They could bring stocks and they can bring commodities and different assets on chain to be used and traded 24/7 perpetually. So I want you to pay close attention to this chart here. HIP3 has not been out long, okay? This is something that's only 5-6 months old, all right? And we have consistently seen rapid growth as they bring on, most of the Mag 7s. I mean, we're up to probably 30, 40 stocks on there, 5 to 10 commodities, including gold, silver, copper, natural gas, oil, energy sector. All these different things are becoming available. Even some of the currencies, like the euro, I believe you can trade now. If you go back to when silver was going crazy in March, you had a record day of 1.74 billion on HIP3 alone. Now, this, again, is not taking into account any of the crypto trading and open interest. This is solely the stocks and commodities that have been brought on chain. And this is all brand new. And the numbers are going to go higher and higher and higher. There was a single day volume record, same thing in the silver thing. You had 5.4 billion. Out of the 20 top markets for Hyperliquid, 12 out of 20 of them are real world assets that have been brought on chain. And that is just an amazing stat. And I expect that to just keep climbing over time as they bring more and more on. And as of right now, they have 60 or so live markets. They've been bringing them on maybe 1 or 2 a week that I've seen. And I'm sure that will speed up as time goes by. Guys, take a good look. Take a good look right here. You can really get the idea of where we're at as a market when it comes to derivative trading. In the entire world, you have almost 850 trillion derivatives available for people to speculate on. All right. FX market is trading almost 10 trillion a day. Okay. US options, almost 4 trillion a day. And where are we at with crypto? Guys, it is a sliver of all of the derivative trading in the globe. I fully expect as we move through time, as we move through crypto cycles and bringing more assets on chain, that this is just going to start growing and growing and growing and eating more of this pie. Okay, I think so far, so good. We'll see. And obviously, my bet with this whole idea is that perps will kind of create this next mode. And quick side note here, guys, like if you haven't tried it, go find a place where it is available to you in your jurisdiction. Take $100 and go start learning now. You will see what I mean once you execute a few trades, how simple this really is. Go ahead and look at this chart, guys, to see what is coming. We are seeing crypto perps being dominant at this point, but of course, I do think that might change over time. What's going to be really important here is the US regulatory framework. It does seem like the CFTC and the FTC have taken a step forward here. But again, I don't want to get my hopes up for anything because of the flip-flopping that occurs. But equity and FX perps will go mainstream in my eyes by 2027, hopefully earlier. But by 2027, 2028, it is just going to be a force that you can't reckon with. And we're going to have all sorts of things tokenized. And I don't know what it'll stop at, but we'll see things that we probably aren't even thinking about now. All right, the perps market with real world assets being brought on chain since December, just in the past 3-4 months, has been absolutely rip roaring to the upside. Okay, we already have equities, we got Forex, we got commodities. Bonds still have to come. Indices, you can trade the NASDAQ, and they did partner Hyperliquid, and I believe it is Trade XYZ, partnered with the S&P 500 to make the sole S&P 500 perpetuals contract available on Hyperliquid. Still need credit, still need rates to be able to trade, and it will start to tie everything together so that you can execute anything, anytime, on any asset. It's going to be awesome. By the way, Hyperliquid is not the only thing. Obviously, I have a bias towards them, but everybody is starting to build this out. Robinhood has it. Coinbase has it. You're going to see big institutions have it available, and it's going to become a fee war. It's going to drive it to be insanely cheap and more favorable to the retail trader. Now, guys, of course, the risks are still there. Of course, all of this is not financial advice. It's purely for the purpose of me drawing on screens and education and entertainment and blah, blah, blah. But look, we all know leverage, it amplifies everything. If you're a bad trader, if you're new to this, leverage will kill you. It will dice you up. But you got to get there. You got to learn, because eventually it can help you. And hey, if you do start losing, there's nobody to call here, guys. There's no circuit breaker for you. You can't call up some hotline and say, hey, I misclicked on something. No, this is just on chain, straight up, mano y mano. You get liquidated, you get liquidated. And something to learn when you get deeper into this, you're going to have to also explore the auto deleveraging system of the venue you're trading at. And that can be where the whole ecosystem in a very big crisis moment might take positions off that are winning, and you might that might throw you in a tizzy. But if you learn about it, it's not so scary. And just remember, funding can work against you. This is something you're going to be either paying for or receiving. So if you're not thinking about that, if you're not looking at the funding rate, you can get into a position you want to be in and be paying quite a pretty penny or percentage of your margin to be in that trade itself. So something to think about when you enter these trades. And this is last but not least on this slide here, it's a very important thing. You're going to have a lot of assets that are a bit lower liquidity, okay? And if you haven't traded these things and you think they're all as liquid as Bitcoin, that is not true. You're going to have certain markets that move quite a lot with little liquidity and markets that move less with a lot of liquidity. So when you get into your positions, you have to think about that. People will be hunting other people. And when you think you're safe, you're often actually going to be found very quickly by people that can push those markets a little bit more frivolously. So let me just show you guys who the top 5 are. We got Binance right here leading the league. CZ has always been kind of the GOAT in this space for now. But again, they are servicing most of the world and most of the open interest. You got Bybit, you got OKX, and then you got the best decentralized marketplace in the world, Hyperliquid. But again, very small amount compared to the $50 billion in volume a day Binance is doing, even 14 on Bybit, whereas it's more of like a modest 2 billion a day here on Hyperliquid. So guys, just to wrap up here, this is a shift that is coming. It's kind of up to whether or not you want to be part of it. I think you will be eventually. It's just like, are you going to jump on it now? There's farming opportunities. There's ways to participate in these ecosystems if you really want to, or you should at least be ready for when, if you're an American, when everybody gets the green light to trade everywhere. They're going to be all over. You can learn about what products are being offered where, what assets you want to trade and why. And, do as much as you can now to educate yourself for that moment. Start small. Again, this is something it's kind of like meme coins. You don't need that much money to start. You just load some money in your account, trade very small, and understand how the mechanics work on the sites. And do it with conviction, guys. I think this is going to be huge. Okay, this is going to be a massive change in all of trading, and I want everybody to crush it. So thanks for watching. I hope this was just like a fun perps walkthrough for you. I hope you've walked away understanding it a bit better. And there's plenty of other stuff on YouTube out there that you can go down the rabbit hole. All right, I will catch you guys on the next video. Good luck. Stay safe.